another great set of results, consistent with what we've been achieving over the last nearly 5 years now.
Hello, you're watching Proactive. Joining me are Cordiant Digital Infrastructure Management Chairman Stephen Marshall, as well as Chief Financial Officer Andrew Yu. Steve, Andrew, very good to speak with you. Steve, I'll start with you. Congratulations on delivering another strong set of results with Cord's NAV now over £1 billion. Looking across the portfolio, what were the key drivers of the growth in NAV during the period?
Thank you, Stephen, and thank you for all those that continue to follow us and invest in the business. We couldn't do it without you. As you say, Stephen, another great set of results, consistent with what we've been achieving over the last nearly 5 years now, and not surprising because these are sort of characteristics of the digital infrastructure space. There's demand for more and more capacity across the plumbing of the internet, which obviously drives our revenues, our growth in revenues, and our growth in profitability. We have great management teams, we have a great asset base, and we continue to sell more and more space to our customers, which drive those results. And in reality, has pushed our NAV up 10% over the period, pushing our net asset value per share up to 140 pence. So another great set of results utilising our buy, build and grow strategy.
Andrew, with NAV growth being such a strong headline, can you walk us through how this is translated into the company's financial resilience and what measures you're taking to support sustainable returns as we move into 2026?
Thank you, Stephen, and good morning. So underpinned by another strong set of results, we're pleased to announce an interim dividend of 2.17 pence per share. So this is 50% of the target that we set earlier in the year. So the dividend remains well covered by adjusted funds from operations at 1.7 times. We continue to pursue a progressive dividend policy, having increased the dividend for every financial year since the IPO. In terms of gearing remains prudent and steady at just under 41%, and we have no debt maturities now until June 2029. From a liquidity point of view, we have over £200 million in undrawn debt and cash. So this means we do have funding to continue growth capex and bolt-on acquisitions for the portfolio. And finally, it's worth mentioning we continue to be well aligned with shareholders. So the management fee remains linked to market capitalization, and insider ownership stands at 2.2% of the outstanding stock.
Steve, it's clear that active management has enabled Cord to execute its buy, build and growth strategy to date. Could you share examples of where your expertise and hands-on management have translated into performance improvements for your portfolio companies?
Yeah, well, we have, first of all, let me say, we have absolutely first-class management teams across all of our portfolio companies. Those companies are number one or number two in the markets in which they operate, and therefore really do generate great interest from people wanting to work for the business. But we at the centre, half of our staff, as you know, come from industry, half come from private equity and banking, and together we interact really quite strongly with the local operating executives to look at opportunities that they presented to them, to look at ways to pursue medium to longer term strategic initiatives, and in some instances actually to work with them in areas where they're perhaps under challenge. And I think there's clear examples of where that working together in partnership has driven a lot of value. I mean, I guess probably the most recent one would be BT Ireland. We've worked seamlessly with them on the due diligence and the negotiation of the terms, and now on the integration of that asset with the existing assets that we already own through the Speed Fibre Group in Ireland. And it's a very collegiative approach, which has really served us well, right, over the last 4 or 5 years.
Andrew, Cordiant has delivered consistent growth over the past 4.5 years. Do you see any stepwise accelerations of growth above this?
Yes, so we expect to continue making low risk, steady returns. So we're targeting at least 9% to shareholders every year through a mixture of income and capital growth. But we do believe there are a number of catalysts which could enable us to outperform this very well. So I think from a sectoral basis, the wins are behind our back. So if you look at the proliferation of artificial intelligence, video streaming, high intensity compute applications, this is all leading to a demand for more connectivity, more processing infrastructure. And so this feeds in well to the asset base that we're investing in. So take a good example, the 26 megawatt data center in the Czech Republic, Prague Gateway. We're hopeful of commencing the main construction phase next year. And this could be a significant driver of the NAV. At the moment, it's not included in the valuation. In fact, we've already included the development costs of that project in our valuation. Another example, as Steve mentioned, the acquisition of BT Ireland. So this should enable now Speed Fibre to become the main competitor to the incumbent in Ireland for the wholesale provision of fibre. And we expect this acquisition to generate a significant amount of synergies for the company. And finally, we do have a significant mobile tower portfolio, and we do believe there is the opportunity to unlock value from that in the future. If you look at comparable companies in the space trading around 20 times, we do see an opportunity in the future to potentially monetize that portfolio. I think it's worth pointing out Deutsche Bank recently did a sum of the parts research report for the portfolio, looking at the various subsectors we have, and their view is a mid-case valuation of nearly 170 pence per share.
Maybe I could make a few additional comments in respect to that. I mean, I do think that we have a very predictable sort of growing cash flow stream based on the long-term contracts with blue chip clients that have escalation clauses in them that sort of drive that very predictable growing cash flow stream. But as Andrew's pointed out, there are a number of initiatives on top of that would actually drive, perhaps stepwise changes in valuation. The new potential 26 megawatt data center in the Czech Republic could be extremely valuable. It would make the company the largest provider of data centers in the Czech Republic. The synergies that will come out by merging BT Ireland with our existing assets there are really quite financially beneficial, and will allow us to offer much greater service and capability to our existing customers and potential new customers across Ireland. And in Poland, it's quite exciting that Emitel have won this fairly sizable contract against other operators to build up to 320 new mobile telecommunication towers for Orange in Poland. So there are these initiatives that are sort of on top of the existing sort of normal growth trajectory that we've experienced over the last 5 years, and will likely continue for the next decade.
Well, Steve, Andrew, congratulations again on those results. I hope you'll continue to keep us updated with your progress.
Thanks very much, Stephen. And again, thank you very much to all of those of you that have invested in the business. We can't do this without you. I hope you like the asset class. It's got great future prospects, and we'll continue to work hard to deliver you both a yield and indeed growth in the capital base over the next few years. So thank you very much, and look forward to future success.
That's Stephen Marshall, Chairman of Cordiant Digital Infrastructure Management, as well as CFO Andrew Yeo.